What are some of the advantages of saving when compared to investment? Hi, welcome to another episode of Finance Friday with Adaku. I'm glad to have you here. Okay, so in my last video, I mentioned that when you save money, you are just simply stashing away cash, and it's typically done with financial institutions. You just put aside the money, the banks can use it to trade and do other businesses. You are certain that you get your money back, right? Sometimes you could get the money with some extras, that is a return. Sometimes your money could be deducted for all the numerous charges that applies to the banks. Meanwhile, for investment, it means that you are buying a part of a business, buying a form of asset that either appreciates in value, or the business pays you a certain return percentage for your part ownership of the business for that time frame. Now, what's the advantages of saving when put side by side investing? Number one, when you save money, it is easier to liquidate it, right? So when you put your money and lock it up in the bank, let's say you just create a savings account, maybe in Super Capital, on Super Capital app, you create a savings plan and you just stash your money there. It's easy to liquidate it, right? So Super Capital typically does 1 year, but when you need your money urgently, there are also steps you could take to get the money back. It's very easy to liquidate monies that are kept in savings. In times of emergency, you don't really have to worry because you can always, 1, 2, 3, you've gotten your money back. However, when it comes to investment, liquidating investments are not exactly as easy as liquidating savings. Why? When you're trying to liquidate your investment, one of two things could happen. So it might take you a very long process, and before you finish the process, the reason you needed that money urgently would have gone past, so you'd have lost the opportunity. Or two, you'd be forced to sell maybe at a loss, because when you lock your money, say for instance for maybe treasury bills, it takes until the end of the tenure, you can't get that money back. If you set the money to buy an asset, and by the time you bought the asset was around 100 grand, by the time you're looking to sell the same asset, you don't get anybody to buy it for even 100 grand. Because it's a pressure sale, people would typically price it lower, and so you will lose a certain percentage of that money. That's one of the disadvantages of investing. So you don't invest for short-term purposes. I've often mentioned that the goals for which you set out to do anything is very important in your personal finance. So another advantage of saving is that you see this, you have this immediate adrenaline satisfaction when you look at your savings account. The fact that the money is swelling, right, is very tangible compared to investing. Sometimes when you invest, they share the fact that you could see that the value of your investment is typically unstable. Today it is high, tomorrow it is low, right? It comes with its own fair share of worries, especially also if you are investing for short-term purposes, or you are investing as a trader. Example will be stocks and Bitcoin traders. So people that trade stocks and Bitcoin, I don't know how they manage it, but reading the charts every day is a bit unsettling for me. So that's exactly why I am not a short-term trader. I would rather just put my money in stocks and assets that I am certain will appreciate, because of the fact that they are needed almost on a daily basis. And when you look at the future, it's also important to realize that these things will also, continue to appreciate, because people will continue to use those things, right? So another difference or between savings and a disadvantage between savings and investment is when it comes to savings, you can save whatever amount you have, right? So if I have 1,000 naira, I can save 1,000 naira tomorrow, save 1,000 naira tomorrow, next tomorrow, save 5,000 on Sunday. But for investment, sometimes it is tied to certain amounts, which is why some people are unable to, make investments, cannot even afford investment, because the price point is usually very high. Take for instance, you want to buy treasury bills, you need to have a certain amount to be able to buy treasury bills. You want to buy gold, you need to have a certain amount to buy gold. Nobody cares whether you are a teacher, nobody cares whether you are a startup founder, nobody cares whether you work for Goldman Sachs, right? Whatever the price is, that's what the price is. You cannot except you now begin to save in bits and pieces until you can achieve the set price, right, for those things. So yes, I think I've been able to educate you today on the advantages and disadvantages of saving and investment. If you think I have missed anything out, feel free to drop them in the comment section, and I will see you in the next one. Cheers.